In our last video, we talked about how we jumped in on Shopify. In fact, we bought right here at $1139.99. We entered with a 10% stop loss because that put us about 1 to 2% below our support in case we had a breach. Guess what? We did have a breach. Now, Shopify went up a bit before it went down, and we could have sold. We considered selling, but we decided to let it ride. And because we have a trailing stop loss, it raised our stop loss above support. So we got stopped out here, probably about 1% above our support. But on Friday, Shopify breached that support pretty substantially. It breached it by 5%, which is a big red flag to get out, which we did. So this is not a good sign for Shopify. But at this point, I'm going to need several days of any kind of confirmation of it staying above that support line to prove that that's just a momentary breach. I would not be surprised at all if it continues to move below and find some other level of support, which at this point, I do not know what that level of support is. So Shopify is a good example of why use a stop loss, and we used it effectively and got out. If we'd wanted to be more conservative, which we did discuss, we could have gotten out with about a 4% gain, but we decided not to do that. We decided to let it run and see if it's going to move up towards previous highs. And stop loss of 10% gave us plenty of room for that stock to run and breach that support without hurting us. And that's what we did. So use that stop loss, make it work for you so you have money to invest for another day. Stay with us and we will be doing more stocks. If you have requests for stocks you'd like us to do analysis on, please leave it in the comments below and we will do a separate video on it. All right, stay with us.